Welcome to Marketplace Tech Bytes, our weekly review of the biggest stories making headlines across the industry. I'm Lily Jamali. This week on the show, Amazon is set to debut on the Dow. VCs reconsider investments in China, and the EV slowdown hits Rivian. Helping me dig into all of that this week, we have Jewel Burks-Solomon. She's managing partner at Collab Capital. Welcome back, Jewel. As always, we're going to start with our bite of the week. This is one number that tells us a little something about the week that was in tech. And Jewel, what do you have for us this week?
Sure. So the bite of the week is 1896. And that is the year that the Dow Jones Industrial Average was founded by Charles Dow. So I share that number because I think it gives us good context around why there is energy and excitement related to Amazon now joining the Dow Jones Industrial Average.
I love that one. And this is happening on Monday. They are going to be booting Walgreens Boots Alliance from the Dow. What is prompting Amazon's addition to the Dow Jones Industrial Average? What can we glean from this?
Yeah, so I think there's a few things to note. I mentioned that founding year. It's interesting because the only stock that was previously long lasting in the Dow Jones Industrial Average was GE, which was in the average for 111 years and was booted by Walgreens in 2018. And so it's interesting that now Walgreens is getting the boot after just 5 or 6 years by Amazon, which is also interesting because Amazon is coming in at a time when Walgreens' performance has not been sort of up to par, not been what the market would like to see. And so now Amazon's coming in at a time when they are expanding into healthcare, of course, a stronghold in cloud computing. So it's really kind of a lot of things happening at once. And then I think this change is prompted by Walmart's stock split. So that was really what caused this change at this time.
So you mentioned healthcare and web services. We didn't even talk about the e-commerce side of the company because in a way, I don't want to call it secondary, but in some ways, you know, this Amazon story has evolved away from that in some part. Can you talk about the healthcare piece of this story? How does that explain where Amazon is right now as a company?
Yeah, so Amazon over the last few years has really been putting together the pieces so that anything you need from a healthcare perspective, you can talk to Alexa and get the answer, get your pills delivered, go to a clinic, and they own all of it. And so I'm referring to, of course, their acquisition of PillPack several years ago, more recently, the acquisition of One Medical, and really just taking the approach of domination in the sense of how can we make sure that everyone has access to healthcare through Amazon. And so even putting the One Medical alongside Prime as a benefit is something that they've done to ensure that they kind of own the value chain across all of the healthcare industry.
Yeah. We like to say here at Marketplace, the stock market is not the economy. Well, the Dow is not the stock market. If you are an institutional investor, you're probably keeping a closer eye on the S&P 500 than the Dow. But this is something that really matters to retail investors. So it's going to be really interesting to watch this story unfold. And, you know, being on the Dow doesn't mean your stock's going to pop all of a sudden, but it does hold a little bit of cachet, does it not?
It does. It does. And I think Amazon has got a little bump just by the mention of them coming on board.
Yeah. We should also mention Uber is going to be added to the Dow on Monday as well, joining Apple and Microsoft among the fabulous 7. So now you have three of the 7 on there. So we're going to be returning to some company news in a moment, but I want to move to our next story. I've so been looking forward to having your take on this one. About venture capitalist Aaron Griffith at the New York Times has been writing that some venture capital firms here in the U.S., in Silicon Valley specifically, are starting to divest from startups in China. Talk to me about why American VCs are moving away from China.
Yeah, I think there are a few reasons. One, there's obviously a lot of political contention going on at the moment with China, and there are risks involved with being heavily weighted as far as investing in China, or at least that's what some VCs believe. And so you've seen some firms take their China investments and put them under a different entity, and you've seen some VCs pull out of China altogether. And so this, we'll see what happens, but I think it will do a few things for American-based startups. Hopefully, this means that there's more investment capital available to them. And I think, we're seeing this resurgence or this thematic approach that many VCs are taking now around American dynamism. So making sure that the solutions and technologies that are being developed are happening here, and really taking it from an approach of there's a competition across the ocean, if you will, as far as who's developing the fastest related to AI, related to chips, all of these things that are really going to make a difference when it comes to who is the superpower that wins out.
So this could be good news if you are an American startup. How much of this has to do with pressure coming from Washington? We had that executive order from the White House last year, kind of effectively banning certain investments, especially in Chinese startups that are focused on sensitive areas like artificial intelligence, like quantum computing. You mentioned semiconductor chips. And then you also have a congressional committee that's looking into this, doing their investigation and grilling some of the companies here as well, some of the VCs, I should say. How much of this has to do with pressure coming out of Washington, D.C., would you say?
I think that does have a lot to do with it. I don't think any VC wants to be in bad graces with the federal government. So I'm sure they are taking a note as far as some of these executive orders that are coming down. And also, I think it has to do with the fact that people do want to invest here at home. There's a lot of great companies and great talent that's US based. And so going back to focusing attention, and I'll say the last thing is there may be also some LP pressure. A lot of the VCs have pension funds and local investors. And so there may also be some pressure on the VC side from LPs to ensure that investments are staying domestic.
Last thing on this, want to ask you about, is there a part of this that is also about just growth in China slowing down?
That could be it as well. I think the China market has struggled a bit. And so there may not be as many opportunities as there once were. So that may be part of the equation as to why there's been some pullback on the VC side, US-based VCs investing in China.
All right. Well, thank you so much for your unique take on that. We're going to return to company news because there were some interesting tech earnings this week. A little company called NVIDIA, which you can only describe in superlatives, apparently. It came out with earnings on Wednesday evening and did quite well. On the flip side, there is another company, Rivian, the EV maker, did not do so well this week. Wall Street likes growth. What we're seeing from Rivian is not that. They say they're going to be producing the same number of vehicles this year as they did last year. And they were summarily punished for that. So what seems to be going on at Rivian right now?
Yeah, I think the story on Rivian is what we're seeing across a number of companies where if you are relying on consumers to buy in a market where interest rates are high, there's going to be an impact. And so, Rivian is not seeing the growth that it was expected from them. And I think they're going to be sort of trickle down as far as impact there. I'm based in Atlanta. There's been a big story around Atlanta being one of the places where Rivian is going to come and have a big presence. And so obviously there'll be impact to markets where they were planning on growing. But hopefully they're able to rebound. But yeah, this isn't what anyone hoped for as relates to the uptick and the adoption of electric vehicles, and in particular, Rivian.
Yeah, they're burning through a lot of cash. Questions about whether they can be profitable. And what's so interesting to me, too, about this story is how it hits on a lot of themes in tech that we've been talking about. You mentioned higher interest rates, which, that makes it harder to buy a car right now.
Yeah.
A slowdown in EV demand is another theme we've talked about a lot on this show. And then the company is going through layoffs as well. They just announced this week that they are letting go of 10% of their staff. What I do want to ask you about too, though, is it sounds like they're pushing into a more affordable bracket. And by affordable, I mean vehicles that are $40,000 to $60,000, which is still out of reach for a lot of people. But does that move generally seem promising for this company?
Maybe. One thing that stuck out to me in reading about what's happening with Rivian is the fact that they are so far from profitability and they are losing so much money per vehicle. And so if they go down on the prices of the vehicle, then you still have this problem of how do we get to a point where the business is profitable? And that takes them further away from that destination. And so I don't know if it solves the problem. Obviously, consumers would be happy. Perhaps more people would buy. But I think it's still a big issue around how do they get their cost model in such a way where they can achieve profitability, which is what the market wants to see.
Yeah. And before I let you go, just would love your take on the EV space in general. We used to talk 2 years ago about the crypto winter. Now I'm hearing the phrase EV winter, as in demand has gotten that bad in this space.
Yeah, I've been a electric car owner since 2016, so always been excited about this space and hoping that it really takes off. It's a little disappointing to see that it's slowing down a bit because I think from an environmental standpoint, we want more electric vehicles on the road, but again, the businesses and the underlying manufacturers have to figure out how do they get the cost model to work so that they can continue to increase production, get more cars on the road, and also make sure that the charging infrastructure makes sense so that folks that are maybe in more rural areas outside of the big cities have access to be able to have these cars and charge them up.
This is so important. We will not stop covering it anytime soon, that infrastructure story. All right, Jewel, it's great to have your take on this story and so much else. Thanks for coming back.
Thank you so much.
That was Jewel Burks-Solomon, managing partner at Collab Capital. Thanks so much for watching Marketplace Tech Bytes Week in Review. Jesus Alvarado produced this week's episode, and I'm Lily Jamali. This is 8 p.m.